Good morning, doctor. My name is Shu Rong, battery number 284-7. Today, I will going to present about study on Krung Thai Bank in Thailand, credit risk and its determinants. Krung Thai Bank face increased credit risk exposure, higher default rate, and decreased loan demand due to global economic factors, domestic economic challenges, geopolitical and international issues, and demographic changes. It to careful loan portfolio management and risk mitigation strategies. The objective of the study are as follows: to identify the factors affecting internal variable towards credit risk, to identify the factors affecting external variable towards credit risk, to maximize the factors affecting internal and external variables toward credit risk. Three research questions are listed below. Is there any correlation between internal variables on credit risk? Is there any correlation between external variable on credit risk? Is there any correlation between internal and external variables on credit risk? Credit risk is the change in the values of loans and derivatives due to changes in borrowers and counterparties' credit quality. It arises from the client's refusal or inability to pay what is owed, potentially leading to bank insolvency if not managed properly. Return on asset is the ratio to evaluate the capacity of management to make profits from asset management. Liquidity risk arises when the bank cannot cope with declining liabilities or increased resources. Bank usually set aside some part of their capital to cover expected loans losses in order to mitigate credit risk. Capital adequacy ratio is the percentage ratio between an institution's primary capital and its asset, loans, and investment. The next slide is methodology. I use sampling technique. Data to extracted from the bank's annual reports for the years 2019 to 2023, 5 years. Binary least square regulation ratios such as ROA and liquidity ratio extracted from balance sheet and income statement. Below are the three models tables. Credit risk has a mean of 0.0442 with standard deviation of 0.0049. The standard deviation shows that the credit risk is less volatile as it is lower than 1. Under performance, the mean of return on assets of Krung Thai banks is 0.075 with a standard deviation of 0.0025. This suggests that the average profit of this company within 5 years is around 0.75%, and the standard deviation shows that there is a small difference in profit among 5 years. The table shows that the mean of the debt to assets ratio is 0.8992 with a standard deviation of 0.0048. This indicates that 89.92% of the bank is financed by debt financing and 10.08% of the bank's assets are financed by equity financing. The small standard deviation shows that the solvency of the bank is stable. The average and standard deviation of leverage ratio is 0.2124 and 0.0311. This displays that Tier 2 capital is about 21.24% of Tier 1 capital. The mean of loan loss provision is 0.0707 or 7.07%, which is less volatile within the 5 years. The table also displays that the mean of regulatory capital ratio is 0.0959, showing that the percentages of Tier 1 capital in total assets from 2019 to 2023 is about 9.59%. The standard deviation of regulatory capital is 0.0033, shows small volatility within 5 years. For the macroeconomics, the mean of GDP stands at 0.5660, with a significant standard deviation of 3.7405, indicating considerable profit volatility in the 5-year period. Moreover, the interest rate mean value is 1.68, implying that the cost of borrowing of this corporation is approximately 168%. The mean of yield curve is 1.9378 with standard deviation value of 0.661. This indicates that the yield curve on average is 1.9378 within 5 years. The relationship between interest rate and time to maturity of the debt of borrowers in a given currency is less volatile and stable since the standard deviation is less than 1. The research displays that the M3's mean is 4.9 with standard deviation of 3.1305. It demonstrates that the standard deviation shows the total money supply in an economy is volatile and not stable within 5 years. Next is correlation. The Krung Thai Bank's credit risk show a moderate positive correlation to the leverage ratio having a p-value equal to 0.003. This indicates that when the leverage ratio is increased, credit risk also will increase. It also shows credit risk is positive significant correlated to the risk-weighted asset with p-value of 0.026. Credit risk has negative significant relationship with the loan loss provision, capital adequacy ratios, exchange rate and yield curve having a p-value equal to 0.005, 0.019, 0.005, and 0.031 respectively. The others are not significant to credit risk due to the p-value is bigger than 0.05. Model 1 shows only 3 variables which is equity multiples, loan loss provision and liquidity ratio contributed to Krung Thai Bank's credit risk with an R-square of 0.981 or 98.1%. The adjusted R-square is 0.925 of 92.5%. It refers the remaining variables are not relevant to this research. Model 2 shows only interest rate, inflation, and GDP contributed to Krung Thai Bank's credit risk with an R-square of 0.402 or 40.2%, and the adjusted R-square is negative 1.394, thus reflecting that this model is poorly defined. Model 3 shows only 3 variables which is GDP, loan, and loan loss provision contributed to Krung Thai Bank's credit risk with an R-square of 0.991 or 99.1%. The adjusted R-square is 0.966. Next is another one. For the internal factors, the significant amount p-value show value of 0.173, where p-value bigger than 0.1. The value of 0.173 indicates that regression model's variance is not significant and not to reject the null hypothesis. For external factor, p-value shows value of 0.x75, where p-value is bigger than 0.1. The value of 0.x75 indicates that the regression model variance is not significant and not to reject the null hypothesis. For internal and external factor, p-value shows value of 0.117 where p-value bigger than 0.1. The value of 0.117 indicates that regression model variance is insignificant and not to reject the null hypothesis. Next is coefficients. Internal factors show independent variables consist of liquidity ratio, loan loss provision, and equity multiple are not significant to credit risk because the p-value bigger than 0.1, having a p-value equal to 0.313, 0.113, and 0.804 respectively. External factors show the GDP, inflation rate, and interest rate are not significant to credit risk due to the p-value bigger than 0.1, having a p-value equal to 0.943, 0.663, 0.796 respectively. Internal and external tables show loan and GDP are greater than 0.1, having p-value of 0.296 and 0.294. Loan loss provision is negatively significant with credit risk having a p-value equal to 0.053. It shows when loan loss provision decrease, the credit risk will increase. According to Auxilie and OTA, when banks decrease its loan loss provision, it could find itself unprepared for possible loan default. In conclusion, refer to correlation table, leverage ratio, risk-weighted asset ratio, and exchange rate, which is positively affect Krung Thai Bank's credit risk. However, loan loss provision, capital adequacy, ratio, exchange rate, and yield curve are negatively significant with credit risk. Refer to coefficients table. Loan loss provision emerged as a key effect on Krung Thai Bank's credit risk due to the p-value smaller than 0.1, having a p-value equal to 0.053. Finally, the outcomes reveals prove that Model 3 internal and external factors are more correlated with credit risk. This is because a reduction in loan loss provision may suggest the increased credit risk for a financial institutions. These provisions are essential funds reserves to mitigate potential losses from unpaid loans, acting as a financial buffer against credit risk. If a bank lowers these provisions, it could indicate inadequate preparations of potential losses, exposing the banks to the risk of loan default. The recommendation is Krung Thai Bank should implementing robust risk management practice is crucial. This includes through credit analysis, stress testing, and ongoing monitoring of borrowers' financial health. The bank should enhance risk assessment tool for evaluating borrower creditworthiness.